Today's episode is part of our special series with Q2 called The Experience Factor. Over a series of episodes, I'll talk to consumer banking experts and financial institution leaders about how account holder experiences and engagement contributes to long-term success. We'll discuss practical, proven steps to differentiating and growing your financial brand. Welcome to The Experience Factor. Hello and welcome to Banking Transformed, the top podcast in retail banking. I'm your host, Jim Roos, owner and CEO of the Digital Banking Report and co-publisher of the Financial Brand. According to recent Q2 research, 74% of people across generations want more personal banking experiences, and 70% trust their financial institution to create these experiences using data and AI. Yet, many banks and credit unions still struggle to deliver the level of personalizations consumers expect from their digital experiences. On this episode of the Banking Transformed podcast, Anthony Ianniciello, Vice President of Product Management at Q2, and David Sant, Chief Strategy Officer at Cyprus Credit Union, explore how financial institutions can transform commodity banking transactions into differentiated, personalized experiences that build lifetime relationships. Our guests share insights from both the technology and implementation perspectives, discussing real-world challenges and solutions in building a modern banking relationship strategy. At a time when consumers are demanding increasingly personalized solutions from their bank or credit union, data, AI, and democratized insights, it is possible to create dynamic personal experiences that resonate with consumers across generations. So Anthony, let's start with you. Can you share a little bit about your role at Q2?
Yeah, thanks, Jim. Glad to be here. My role at Q2. So it's been almost 10 years. In January, it'll be 10 years at Q2. And even on this topic of experiences, when I got here, I started doing a lot of work with our user experience team. So I was a manager for user experience 10 years ago. And here at Q2, I think at the time we had 5 UX people. Today we have about 30 across the entire business. But my journey's taken me out of that and into more product management roles. And so today I am vice president for product management with our digital banking solution of products. So consumer, small business, commercial, all of the aspects that bring together our digital banking solution.
Great. David, it's interesting. You've been at Cyprus Credit Union about the same amount of time that Anthony's been at Q2. So could you share a little bit about who is Cyprus Credit Union, for those who don't know, and the evolution of your role over the last decade?
Absolutely. And Jim, thanks for having me as well. I'm excited to have a chat today. So Cyprus Credit Union, we're located in West Jordan, Utah. We're right around $1.8 billion. Our field of membership is really open that anybody in Utah could join us through our association with the Community Recreation Association. But I joined, just like Anthony, right? I hit 10 years in January. So it's almost like we arranged this, right? Start at the same time. I came on as the vice president of marketing, really overseeing specifically marketing and PR functions. After a few years, I was made the chief marketing officer, where I had my marketing functions, and then we added training as well. I was over training during a core conversion. So if anybody wants to test their blood pressure and their ability to handle some fun logistics, try putting 450 employees through new hire training in 3 weeks. That's fun. But post that conversion, we actually, because we had better data, we had better ability to do customizations and things like that, we added business intelligence under my area. So a lot of the data things. And people often say, why would you put business intelligence under marketing? Well, really, as we view it, data is telling a story and marketing is telling a story. So it has this natural alignment. After a couple of years as CMO, actually about a year ago, I was made the Chief Strategy Officer. So that's my title now. I'm the Chief Strategy Officer at Cyprus Credit Union. And in that role now, it's all the things I said, plus product management and then project management, and also just big strategy, right? What's our strategic planning with the board? What's some of our big strategic initiatives and products that we're going to roll out? So
Anthony, We discussed in a previous podcast the research you did with Harris that showed that 74% of people want more personalized banking experiences. What does this mean when you really talk about the relationship building side of this? You just came out with a white paper around the whole relationship building component and engage and how you move from simply doing things that are more targeted to really personalizing the engagement over the customer journey. So what has really changed?
Yeah, well, first of all, I think it's really interesting that Dave and I both come from a little bit more of a marketing background. And I think that's we've seen that as a really interesting evolution in solving this problem too, is that even in the kind of the digital banking management and operations aspects, that it's so important that it be tied to marketing, because marketing has had the view of what does the segmentation look like? What are the groups that we're trying to address? How are we thinking about the different audiences that we have at the credit union? And so that evolution is really important. And really, we're seeing more and more tying of that. And it's been fun to work with David and team and those that come from more of a marketing background. I think where we have seen the evolution is a little bit like you're talking about, Jim, from this idea of next best product to really what's the next best experience. And that's how we drive engagement, and not just thinking about how do you take a segment and provide an ad that drives to product adoption, but even once you get to that product adoption, how are you driving engagement with that product? How are you driving utilization? How are you driving adoption? The other thing that we've seen over the last few years is just really the explosion of fintechs and neobanks and financial services that are outside of a traditional financial institution's offerings usually. And so the other thing that is really meant for us when we think about this, like 74% wanting personalized experiences, is they're wanting features and functions that may or may not have traditionally been there. And so it's about optionality as well. And so when we think about the 20 million end users that we have sitting on a platform, for us, there's a lot of distinction amongst that group. And how do you then have the optionality for our financial institutions to say, I want to target small businesses, and I want those small businesses to have the capability for invoice management as well as cash flow management. But that's not the same as a mid-sized business, and that's not the same as a corporate, right? The same way, when you think about financial literacy and tools for youth accounts, you want to build that, and you want to have optionality to work with a third-party partner to bring in financial literacy tools that might be different for David and where he wants to target in Utah, that are different from somebody else that's in a different part of the country. So a big part of how we've seen this evolve is getting away from that sort of next best product and moving towards next best experience. But also that means there's a lot of optionality that we can start to provide and needs to be included in what that next best experience looks like. So it's not just a one size fits all.
So let's take that a step further, Anthony. It's interesting because I get frustrated as an observer of the marketplace where I see just tremendous insights being created, but they're not followed up by great engagement, great deployment. I use the example many times that I have both a personal and a business bank, and I know that they both know more about me than maybe I would even care to know. That they know about maybe when I go to sleep at night, when I start driving to Starbucks, whatever it may be. But the challenge is moving from that information or insight to deployment and activity. How does Q2 help their clients actually deploy against the insight you find?
Yeah, it's such a great question, right? I mean, we've all been in the industry for a long time, and like different data providers. So yes, there's a lot of insights, Jim, but as well as I do, different data providers store that data in different ways. They have different user IDs. And so the user ID of you in one system may not be the same as you in another. And so what we've tried to do is build a solution that doesn't require data scientists and data analysts to be able to take the insights that we do have on our platform. So we know things like the products that the account holder is using. We know insights about how often they log in and what they do and some behaviors. And then we can also take those insights and we can roll them into some thoughts, some recommendations. We can turn those behaviors into things like, this looks like a small business, or this looks like somebody that is utilizing short-time loans, right? And they're probably being taken advantage of. And so we can highlight some of those categories as well. But the goal, back to kind of what we were talking about around marketing getting involved in this, instead of it being a down and dirty data exercise to try to get to the insights, we've tried to elevate those into a tool that pulls that together as traits, lets our institutions build audiences and groups, and then have those be the way that you can then make your experiences actionable. So a really important part of that for us too is that like people's lifestyles change, right? Their life, they evolve over time. And so just creating a segment and saying these people are in this box, and then 3 months later, their deposits go either through the roof or through the floor, and you need your experience to evolve with that. I mean, that's part of providing a personalized experience is all the other traits about me might be the same, where I live and everything, but my deposits have changed, or some other,
or my flow of funds.
That's exactly right.
I may have 7 relationships outside my personal relationship that's with my primary, what I'll call primary bank in big quote marks nowadays. But if you don't know what's going on behind the scenes, outside your doors, you've many times lost the most important piece of information.
That's right. So we really think it's important to have that sense of, what do you know about the traits, and how is that dynamic as Jim moves through and exhibits kind of different traits about himself? And then you tie that to the experience goals that someone like David is trying to drive at an institution, and say that audience is trying to drive these goals, and these are the products and services. And as he evolves over time, those products and services, that navigation should change. I mean, sometimes it's as simple as that, right? Some things that didn't show up before should show up. They were harder to find. Now they should be easier to find because maybe somebody's financial status has kind of changed, and you want to elevate some of the literacy products. So that's how we really think about it, try to make it as easy as possible and not have to have data scientists get there, and then make those segments something that can evolve as the user's lifestyle changes.
So you really partner with your clients to help them deploy against the insights you're sharing with them.
Yeah, we try.
So David, where was Cyprus Credit Union in its transformation, its relationship building process, maybe let's say 3 years ago? And where is it today? And additional question that is, what are the key challenges that you've seen along that journey?
Yeah. So looking back, a few years ago, we knew where we wanted to be, but we were really kind of dealing with, Anthony talked about the ability to have those singular customized experiences. We were having a hard time delivering those. And part of that is because, I talked about our core conversion earlier. We were on a core that was harder for us to create customization in. We didn't, developing was part of someone's job, but it wasn't a single person's job. Data as well, our data was very siloed, and data was part of someone's job, wasn't a singular person's job. So we needed to make more investment in those areas. And without having official developers or having some of those, we really relied on third-party development, or we relied on our vendor partners. And that's a very expensive thing to do, right? If you're relying on that third-party developer, it's expensive, and you lose some of those elements of control in what you want to do because you're not doing it in-house. And the problem we really had with some of our vendor partners is we'd have an idea, right? There's so many things out there, and people don't just want their mobile banking app to do transactions, right? They want to be able to use it for aggregation, for money management. I mean, even with some of the things you're seeing today, they want to use it for booking travel. They want to do so many things within that app. So we would see some type of innovation, but we'd have to rely on the vendors. So then we're getting slated in for something that now is 3 to 6 months till we can start. Then you're 3 to 6 months for development. Then you're training. And that speed to market was so slow that oftentimes we'd be ready to launch, and there's already a newer, better thing that's out there. So that was probably that biggest challenge, right? Was improving that speed to market. Some of the things we've done over the past years is we've really kind of changed that investment, right? We now have our in-house developers who can write, and we converted to a core that is easy to write to, and it's easy to integrate with. So when we were doing that, shopping for that core during our core conversion, that was a big thing, because we wanted to find one that plays well with everyone else, because you don't just want to have to develop everything here. If you have something that works, that you can easily integrate, that easily integrates with Q2 or easily integrates with our core, being able to pull that in increases that speed to market as well. Investing in a really good data warehouse that can get all of your data in one place so that you're able to use the data, create those stories. That's that first step to creating customization, is you have to be able to know who your people are and what they want before you can personalize anything to them. So really what we've done over the past few years is increasing that speed to market and increasing our access to data and our ability to leverage that data for decisions.
So it's interesting, David, Cyprus Credit Union, I'm very familiar with the Salt Lake City area. And I know that between Salt Lake City, the city, and up in the mountains, there's a lot of very, very, very progressive credit unions, financial institutions, and fintech firms.
Mm-hmm.
Because of that, the consumers in your marketplace, the small businesses, and even the commercial clients in your marketplace have higher expectations in many markets because you're all beating each other up all the time.
Absolutely.
So with that said, how do you go to market faster? How do you make changes in maybe a 3-month period instead of a 1-year period? How do you get everybody in the organization pulling in the same direction?
And I think that's a challenge we're still working on, right? I mean, getting everybody pulling in the same direction, that's a huge thing to work towards. But one of the things that's been really good for our speed to market, again, it's been the investment in development, it's been the investment in data. But to talk a little bit about as a Q2 partner, some of the things that they've done for us, they have this marketplace that's out there that actually has been very important for us as a credit union because you talk about things like Savvy Money is a great tool for credit management, for not only understanding your credit, but being educated on what you could do to improve it and things like that. Savvy Money is already integrated within Q2 through this marketplace. So we're able to go in and say, okay, we like this. We can vet. Now we're going to do the proper vetting of those
But they've
partners.
done the first stage at least.
Yeah, they've done the first stage. They've almost done that initial RFP, right? Because you want to make sure they work with your banking. And there's a lot that are out there. So we're able to go into those to really dive deep into who's going to work well with Q2. And then it's a really quick turnaround because the integration's already built in and Q2's already integrated with our core. So we're able to, instead of it being a 6 to 9 month thing, we're looking at a matter of weeks. And we've been able to do that with, bringing in Savvy Money, with bringing in some of our budgeting and aggregation tools, with bringing in Zogo for our teen accounts. There's a lot of really cool stuff we've been able to do, and we're able to do it with less resources and less time, which helps with that speed to market.
I can't stop talking about this to the audience that we have in the podcast, that just because you're a smaller financial institution doesn't mean you can't innovate and transform and digitize at scale and speed. In fact, the ability to leverage third-party partners today and those partners and their relationships with other partners makes it so that you can really innovate faster than the biggest financial institutions out there at a much lower cost and with a lot less friction. I can't emphasize that enough because we're seeing, I just did a podcast yesterday around innovation, and I talked about the fact that the most innovative firms today are the biggest and the smallest. And the reason why the smallest do so well is there's many organizations that have the leadership that embraces the change, is willing to take some risks, and can formulate the entire organization to democratize the insight as well as the deployment so that everybody's doing what they should be doing. So, Anthony, many financial institutions are sitting on vast amounts of data. You mentioned before, and sometimes those are in silos in other ways. What are the key challenges when you go into a financial institution to start doing business with them? What are the key challenges you see that they're facing turning that data into actionable insights?
Well, I think it's like I was saying, I think the ability to tie that data together, I think whether or not they have individuals at the institution that can do that. I think sometimes they don't have a data warehouse to be able to house the data from us or others in, and they don't have the staff and the engineering resources to be able to really make sense out of it, sometimes. And then I think the other thing that we see is that sometimes that data is really oriented towards what they need to present to their board and not so much how do they take that data and then utilize it to impact the experience. I think another interesting one I was thinking about as you guys were talking is, and this is, your mileage may vary on how you think about this in terms of a data insight, but like the credit unions in Utah do something like 600% more international wires, right? Like that's a point of service that is different than any other credit union kind of region in the country. And so that same notion that part of what smaller institutions are better at is knowing their community better, knowing what types of services that they need. And a lot of times then they come to us and say, this solution is a corporate solution that I can't go offer, my members, but what's the 2 or 3 off-the-shelf solutions that I can go solve an international wire problem with, where I don't have to pay, the amount of money for a corporate solution, but a smaller solution to be able to deliver. And I think that's an interesting kind of, that's that same point of there's data there that tells you what's happening and what types of transactions are happening and what users are doing and what members are trying to accomplish. And then to Dave's point, like how fast do you then pivot and go, can I do that cheaper, faster, better, more engaging with something off the shelf, get it plugged in? And then also to the kind of personalized experience aspect of it, not just turn that function on for everybody, but target to the people that are making those kinds of transactions and that you can specifically help and support. So I think that the hardest part is for institutions to see the value of what they have, then be able to make the business case associated with the people that need to help make that data accessible. And then back to that's why we built some of the tools that we built, is to make it more accessible, make it easier to get access to, so that you don't have to have some of the data scientist tools. You can, and you can leverage both of them, but how do you democratize access to it and then let it kind of drive the experience better?
And what's interesting to what we see is that, you have a really good relationship here with Q2 and with Cyprus. And I think what's interesting is both your organizations have management that embraces the change that's going on in the industry, is willing to take chance to make things happen. And I know David's able to take advantage of other relationships you have with other financial institutions. But at the same time, you just brought up a great example where there's sometimes the financial institution is educating you as to what's needed in the marketplace that may be different than any place else in the country. It is a very different marketplace in Salt Lake City, but it's interesting because I know that you use what each of your customers want to do as being a testing zone that other organizations can eventually take advantage of, which is pretty important. Anthony, also, part of the framework of Q2 Engage is the know, serve, and grow framework. Can you explain a little bit of how this framework helps financial institutions build and maintain and grow relationships throughout the entire life cycle?
Yeah, we started to use that a couple of years ago, and it started really internally because we were trying to bucket together how we should build roadmaps and think about this problem of personalization. We started to boil that down into really what you're trying to do is know your account holders really effectively, know as much as you can, right? This topic of data, right? Then what you're trying to do is serve them with the next best experience. So we just talked about that too with, do I know that this number of international wires is happening? Do I have a gap in my service? Do I know that this would be important? What can I serve them with? Can I pull and maybe a fintech wire solution off the shelf that fits with your organization? And then I think what David brought up around travel agencies earlier is a really great example of how we really think grow works as well. So when we talk about know, serve, and grow, know the account holder as well as you can. Serve them with the next best experience and the tooling. And that helps you grow the relationship, but also maybe grow beyond some of the traditional financial institution banking experiences that you've provided in the past. So we really like the extension of that out to things like travel services or insurance services.
Yep.
That we've tried to bring partners in. And it's a great point too, Jim, that a lot of times that's our institutions bringing us those things. Like David saying, hey, I got this segment and I need to bring some travel services in, and have you looked at these integrations? And that's been a really important part about building that marketplace so that we can bring specific people into it. But I think we've talked about it more and more with our banks and credit unions, because it is a helpful framework, I think, in the future about how are you investing in knowing people better? How are you invested in serving them, serving their community, serving their families? And then how is that helping you grow the relationship? And usually by growing the relationship, that helps you know more about them because you have a relationship. And so now you know more, and then you can serve more. So it also creates that flywheel effect in terms of use of the data.
So David, at Cyprus, you've obviously moved your organization forward as quickly as you can to move from, I'll call it beyond experience, to more engagement. I think we're finding out as an industry that it's this, kind of having good experience, especially in the quarter you're working in. Having a great experience is simply the bottom level of what you have to do. I use the example, it's like the restaurant saying that we don't have rats on the floor. Well, that's great. But how do you get beyond that? And so the engagement becomes more and more important. What specific tools or strategies have you seen to be the most effective in helping to create a more personalized engagement process for your members?
Yeah, I think one of the big strategies is probably more of a marketing theory that I live by in a way. And if theory is the right word, I don't know. But it's something I realized pretty early on as a VP of marketing here, and my staff probably get sick of hearing me say this, but I had this realization that our members don't want any of our products. There's not a product we offer that our members want, right? If we could offer our members a house or a house with a mortgage, they're going to take the house. If we could offer them a car or a car with a car loan, they're going to take a car.
Yeah, good point. I like that.
Even savings accounts. People don't want a savings account. They want to provide for their kids' education. They want to leave a legacy of, some type of money they could leave to their kids. They want to retire comfortably. So our products are simply the tools that help people to accomplish these goals. So they don't want our products. They want the goals in their life. So looking at our marketing approach, looking at how we position our products, right? You think about, we could go out and just average mortgage rates as low as this. That's what a lot of people do, but that product means a lot, means much different things to a first-time home buyer versus somebody looking to get more investment properties. So if we can tailor that approach and tailor that messaging with that first-time home buyer to giving them content about how to properly, how to find the right realtor for you. And the investor property, it's getting a little bit more speaking about the, details of investment and how you can leverage property for further investments and ultimately, boosting your retirement. So you're still talking about the same product, but you need to personalize your messaging to the position people are in. And that's with every product we have. And again, it goes back to usable data. You aren't going to have any way of knowing who your first-time home buyers are or who your new parents are. You think about all these life stages people go through where they need financial products, right? Who's newly married? Who is empty nesters? Who's retiring, right? So if you're able to use your data to mine it, and again, everybody likes data and everybody likes to collect all the data, but data is worthless unless you're using it and you're telling that story with the data.
That's exactly right. Yeah.
Yeah. So creating that usable data so you're able to understand who people are and what they might want, and then having the tools to then deliver that data in a personalized way. Because one of the worst things you could do, I was just having a conversation with our CLO about how I have no problem having the marketing team send out 20 to 30 emails to a member in a 2-month time frame, but I don't want them constantly sending them about products they already have. We need to have them segmented. We need to have them personalized. And it goes beyond just email or these other ones, right? If we think about that digital experience, being able to have the tools and, some of the things we have within home banking is this thing of composable dashboards where we can have audience-based home banking experiences. So if you are a parent with a teen who has a teen account, you're able to have tools and messaging in there that's relevant to the products you need in the life stage you're at. And an 18-year-old who just moved out, they're able to go in and see things about first-time home buyer, refi or student loan opportunities, budgeting tools, right? Budgeting is a huge thing for 18-year-olds to have. So being able to take that data and not just sit on the data, but then have the tools that help you to use the data to create that personalized experience. I often say that, when we open a new branch and we talk about messaging around that new branch, nobody on one side of the valley cares if your branch is opening on the other side of the valley. They only care about the branch that they're going to use.
Exactly.
Our digital banking experience is that branch, and people don't care about all the tools you have. They only care about the tools that they're going to use. And to what Anthony said, as they age out of that and get into another life stage, being able to seamlessly adjust those tools and that experience without them having to opt in, just automatically serving it up is a huge thing for creating those personalized experiences.
So David, how about a success story? How about something that really sticks out over the last couple of years? You go, this was pretty cool how we did this, or the solution we found, or maybe how your team worked together towards something. What is the success story that stands out over the last couple of years?
I'll share one from just the last couple of months, and it's probably my favorite product we've launched. So we years ago, or probably a year ago, right, we were talking about needing a better teen account, right? We have some stats that I've looked at, and we're really invested heavily into those teen accounts. We see that that's the highest level of retention we have in adulthood is if they open checking accounts in their teen years. That's that as adults, they're going to have the highest level of account retention. So we're really focusing on providing resources there. But going back to what I said earlier about why would a parent need that teen account? As we did research, we looked at data, and this is collecting your data. This is doing focus groups. This is getting out there and talking to your members, spending the time with them. We really found that the reason they want that teen account, it's not just so their kid has a debit card in their pocket. They want to be able to have their kids prepared to build them towards financial independence, to send them into adulthood better off than they were, whether that's with more knowledge, more savings, but they want to prepare their kids for success. So we use that data that we gather to build a whole product that's not about the product itself. It's about financial literacy, right? So our product is actually built. You can earn up to $200 for opening one of these accounts, but the majority of that money you get is by building your financial literacy. So we needed a tool that, and I'm going to shill for a couple of companies here that have really helped us out with this, but we needed a tool that would allow us to serve up financial literacy, to track it, and then be able to reward and incent it. Through the Q2 marketplace, we found Zogo, and we were able to use Zogo to create custom modules that we can now. So if you get the account, and part when you get this account for financial literacy is you get, you have to have the products because the products are the experiential tool for learning these skills. But you really do your learning inside of Zogo to learn how to spend smart, learn how to save towards a goal, and learn how to budget properly. We think those are the three biggest tools teens could learn. And then we give an incentive for completing those. But then the next problem we had is how do we know who are the parents? So again, going back to data, we know if a teen has an account with us, they have the parent here, but there's lots of adults who have accounts with us. Their kids don't have accounts. So being able to leverage in and dive deep into, transactional data, you can dive in and see who in the month of August is making a payment towards certain high schools. That comes through in those transaction files. So finding in your data, mining in your data, say, okay, which of our members might have teens? And then how can we serve up ads to them? So for that, we've used Q2. I talked about those composable dashboards. There's also Q2 Smart, which allows us to do really segmented messaging inside of our home banking platform. So when a parent logs in, they might not have a kid on their account right now, but we're able to serve it up because our data is telling us they have a teen to get them to open accounts. And then when we have the teens, right, having that customizable experience inside of home banking, where when the teen comes in, they're not seeing our business tools, they're not seeing, QuickBooks, things like that, but they're able to log in and see easy access to Zogo, easy access to the budgeting tools, easy access to their account management. So we're able to create that customized experience for the teens, customized experience for the parents, and then be able to use data to be able to market it to the right people. And it's been, we've only had it out for a couple of months right now, but we've the amount of accounts we've opened has far exceeded our original expectations.
Well, it's interesting because that's another way of building a relationship. Plus, you're getting more and more data as those accounts between the parents and the child interact. And you talked about earlier, the travel bureau, things of this nature, international transfers. There's a lot of things that go on in the Utah area with regard to teens getting mature very quickly through their missionary work and things of this nature. And this even helps the parents. The parents didn't have these tools, but I know a lot of them are looking over the children's shoulders and going, okay, I got to learn this too. I've got to be able to talk. I got to be able to talk, do a good game, and more than just talk a good game.
And it's funny you say that, right? In our messaging, what we send to the parents, we're not going to the parents and saying, hey, have your kids go do this. We're using, this is through our email, right? But we're sending out regular email communications to the members, to the parents saying, hey, this month we're focused on this. Here's a helpful blog article to read. Here's some tools to do. Here's a takeaway. Here's a budgeting printout you can do so you can sit down with your teen and do it with them. We're not trying to take the place of the parents in educating the teen. We're trying to give the parents the tools so that they can teach their teens and in the process teach the parents as well.
And going back to something you said earlier, David, it's important to realize that this whole scenario happened because of a partner of Q2 providing a platform that was already vetted and that the integration did not take, the number of man hours you would have had to take if you dealt with it directly on your own. And I think this is going on across the industry. It's the most interesting part of banking from my perspective is how different solution providers are working together to make it so that they can connect all the dots before the financial institution says, raise their hand going, you know what, I want to use Savvy Money, or I want to use Zogo, or I want to use X, Y, or Z. And the implementation's made easier because the foundation upon which everything is built is stronger and it's already built in advance. So Anthony, speaking about platforms, you have the Q2 Audience Builder. How does that help democratize insights across an organization? And what impact does that have on relationship building?
Well, I think that's what we've been talking about, right? I mean, that's the foundation that sits behind a lot of how you're able to take the traits. And we have looked at it as two parts of the puzzle are how do you build an audience? We like that term better than we like segment. We're kind of a mission-oriented organization. And so it's an audience of people that you're trying to talk to. And that allows you to take that data that's been anonymized and that you don't have to have data scientists dig into and create those audience groups and really tie those to I love the way David talks about really it's the experience goals of the organization. Our mission is to support the financial institutions in the experiences that they're trying to drive and the goals that they have as an organization. And so that audience builder then allows for a marketing team or anybody to be able to build those audiences and then leverage that with the second piece of the puzzle, which is the experience builder. And so you have that audience and then you build an experience that fits for that audience. And as account holders and members move through those audiences, it's driving a different experience over time with them. So it's really how those two things fit together, make it easy to get at the data that we know about, and then build an experience that's attached to those audiences.
And that, on top of that, builds engagement, builds activity. I say it probably in almost every podcast now that when I go and speak to a large audience, I ask how many of you have closed a primary financial relationship in the last 5 years. Firstly, nobody raised their hand, but it's a biased audience. It's mostly bankers. But then I ask, how many of you have opened an account elsewhere from a fintech, maybe a credit card firm, maybe a company like Acorns or SoFi or Robinhood? And virtually everybody raised their hands. I'm only asking for who has done the last 2 years. So I even changed the time span. What that shows is we have a lot of silent attrition because we as organizations are not listening to what our members or customers want. And, David, you brought up an extraordinarily good example of, gosh, we all of a sudden saw a problem out here that nobody is really solving for, or the customers having to solve them for themselves. I mean, I talk about myself saying, I have a really good open banking relationship, but I've had to build it. I have all the connections in place, and not every financial institution allows me to make the connections I want. But at the end of the day, I'm building what's right for me. Well, we're getting better and better at listening to be able to do this on behalf of the customer within the financial institution. Almost like, our GPS system in our cars. It's not just telling us where to go, but it's telling us what's along the way, how to avoid certain pitfalls that may take place or certain shortcuts that may be available. So, Anthony, as we wrap this up a little bit, there's a lot going on right now in the industry. Everybody's talking personalization. Everybody's talking data. Everybody, and then some, are talking about AI. What excites you the most about how financial institutions are going to be able to build stronger relationships and more engagement as we look forward?
Yeah, I think it's interesting coming off of what you were just talking about, Jim. I was thinking about, it's not just that we can pull in fintechs and, they can be pre-integrated, but there's a lot of value in the username and password that your member has with you as an institution.
Yeah.
That is where they see their digital identity a lot of times. And the more that we can, why it's important to us to provide those services like Zogo and make that work is that they're coming to you as a financial institution, coming to David, and that's where they're maintaining that relationship. And it's also interesting when you think about data regulations as they're changing. We're all taking a look at the CFPB, 1033 regulations. And a lot of what those regulations point to is that there is a digital identity that you have to start with. And then that digital identity is where you got to track the data to and where the aggregation is happening from and where everything reports back up through. And I do think that our financial institutions have the ability to take a little bit more ownership of what that digital identity is, because that's where people are going to be going and looking for it. So we see that as a real opportunity for our customers to sort of take advantage of owning that relationship more and having a little bit more primacy instead of necessarily being afraid of what has to happen with some of this data reporting and what's opening up with aggregation.
And it gets down to, where's the value transfer?
Yeah.
At the end of the day,
That's right.
I will provide more and more information. I work with my financial institution to allow other organizations to use my data if, when I'm asked for it, I get something back. And that means you got to either save me time, you got to save me money, you got to think on my behalf. I mean, my perfect financial services world is one where my mobile device every morning tells me what I need to do to take advantage of the next opportunity out there. And unless we do that, we're going to fall short, and the consumer is eventually going to go, you know what? You're not going to hold my identity. You're not the organization or the person that's going to help me. On the other hand, some people may actually have digital twins within a financial institution that will do everything for them. It's going to be very interesting to see what happens going forward.
Yeah. I also think we see a lot of the value in a lot of the AI tools these days in the network, like knowing what your peers are doing best in class. And so a lot of that agent co-pilot nature of what's happening across all the institutions that we see and helping our financial institution employees know what's next to do. And then clearly, I think we see the biggest place that it's going to play a role is in fraud and identity management and security, and then helping with fraud. So we're putting a lot of effort into that space.
Well, and it's interesting is the fraud efforts are the other side of the same coin on relationship building.
Yeah.
Because if I know everything about a consumer that I serve, a member or a customer, then I'm not only protecting them, but as David said earlier, I'm not selling them anything, but I have the offers there at the time they need them, or I have the opportunity for them to do better with what we have. And they don't know everything we have, but the last thing they want is for us to push everything we have. So David, as you look forward, you've gone a long way. You've had the marketing hat on, but you're also very much on the product and customer relationship and even insight side of that business as well. What's coming up down the road for you? What do you see as the next step that your organization has to do to keep ahead of the marketplace?
I think it's continuing innovation, right? Innovation is never going to stop, right? What we provide now is going to be what we provide now that's cutting edge is going to be standard offering, probably, especially with AI, right? Months from now, even. So being able to constantly be pushing for that innovation, and particularly investing in that AI area. I heard it was Dharmesh Shah, right? One of the founders of HubSpot. He had said that if you're worried about AI taking your job, don't worry about it. It will. It's going to take your job, but it's not going to take your title. And what he meant by that is I think across the board, AI is going to allow us to push off all of these mundane tasks that can take up the majority of our time so that we can focus on what most matters and what we're best at and what our strengths are. And that only benefits our members, right? If we're able to not have to do the day-to-day small things that AI can now take off of our plates, we're able to spend more time with the members. We're able to spend more time developing, more time innovating, more time understanding them. But I think that also presents there's a pretty big issue that could create. And that's that, in the same talk that I heard Dharmesh saying, he said that we need to be viewing AI as our coworker. If it's going to take our jobs, or take our job functions, I'll say, if it's going to take functions of our job, we need to view it as a coworker. And if you brought somebody in to take stuff off your plate, you're not just going to put them in front of a computer and say, go ahead and do this. You're going to train them. You're going to make sure that they're properly trained, that they have the knowledge, that you're spending the time making sure that they're going to do the job right. It's tempting to grab AI as an out-of-the-box solution and just plug it and say, okay, we have it. I have a car dealership that it's done all the maintenance on my car for probably 7 years. And it was always easy. I'd go on, I'd say, this is how many miles I'm at. You tell me what I need to have done. I went on the other day to their website, and that was this AI bot that it said, okay, you need service. And it gave me a list of services. And it was none of the services I needed. And there was no way to talk to an agent. And it was so frustrating that I actually got off there and I went to another car dealership. and I got the exact same bought experience from the other dealership. It was obvious these are two dealerships who just bought a solution out of the box, put it on their website, and were able to check the box that we have AI, and I went to a totally different dealership. So this years-long relationship was lost because of non-trained AI and AI that doesn't allow access to the human element. That was a challenge, right?
You know, your point that you shouldn't take the humans out of it, but it means that we as humans have to learn new skills.
Yeah.
The ability to ask questions, the prompting skills are going to be more important than our answering skills, because we want the AI to take over the transactional components of what our job was. But if we let it go without learning how to leverage this tool, we are replaceable. You know, it's the same thing that's happened on every industrial revolution, every revolution before that. You're only replaced if you make or allow yourself to be replaceable. And I can get into a whole podcast on that. But the reality is AI, generative AI right now is one of the strongest intelligence and learning tools we have available. It can make our job very easy and make it so that we can focus on the right things. And the consumer is keeping up with that pace. So if we think we can, take a buy and say, we'll get back to this later, we're the fools, because, and again, I know your area real well, David. There's a whole lot of competitors that are going to go, okay, you take your eye off the ball you go on vacation for 2 weeks. I'm going to try my darndest to take that customer over from you. And you know the competitors because you worked for a lot of them.
I've worked for some of them. I have worked for a couple.
Exactly.
I think one of the most exciting things about AI, so I think about the core purpose of a credit union, right? We're here for people, helping people.
Yep.
I look at our contact center, right? We get a lot of calls coming in every day about simple things like, what's my account balance? And that's what's most important, right? It's taking that platinum rule, treat others the way they want to be treated. They need to know their balance that day. They need to know what time the branch is open. AI can take care of a lot of that, because we also have that member who just logged into their home banking and something doesn't look right and they're now stressed, they need to figure it out, or they have to get money sent internationally really quick because they have a son on a mission or daughter on a mission and they need to help out with that. So we have people who are dealing with these big things, or they just need us to help them get that house that they can finally get, but they need to get that funding as soon as possible. If we're able to free up our agents' time by having them by letting AI take the small things, we're able to help our members who in a faster way, in a better way, to help them with what's most important to them. And I think that's really enables us to truly live that mission of people helping people.
Gentlemen, this conversation could go on for a whole lot longer. And if nothing else, we know it probably can be revisited in a short amount of time. Great to have you both on. I love the podcast that we have, both a solution provider and a client on the podcast, because we get our feet on the ground perspective. We also get a broader based perspective on what the solution providers are doing to make it better do banking. And David, I appreciate everything you're doing. It reinforces my belief that the smaller organizations can do big bank things and can do it faster than the bigger banks, because they have the organizational oomph, the vision, the leadership that says, I'm going to give you as much rope as you need. You may make some mistakes, but I know in the meantime, we're going to get a lot of benefits. So thank you both for being on the show. I appreciate it.
Yeah, thanks.
Thank you.
Thanks for listening to Banking Transformed, the winner of 3 international awards for podcast excellence. If you enjoy our work, please give us a positive review. Also, check out my recent articles on the financial brand and our fantastic research for the Digital Banking Report. This has been a production of Evergreen Podcasts. A special thank you to our senior producer, Leah Haslage, audio engineer, Chris Fafalius, and video engineer, Will Pritz. I'm your host, Jim Roos. Until next time, remember, when consumers are bombarded with impersonal messages, personalized communications will break through the noise.